joined now by economist Paul Alaje to make sense of all of those, it looks like jargon, but many Nigerians will want you to break them down. That's why I'm excited that you're here. Welcome and good to have you here tonight.
Thank you so very much for having me.
Let's see how we can break it down, because some people would say when we listen to the CBN governor, sometimes they always talk about tightening, and it puts fears in the minds of people, even though you get to see an increase in the figures. So in everyday language of understanding, what just went down?
Okay, so the decision made today by the central bank has a lot of implications. Let me first explain what all the figures that you've heard, what they meant. The first one says that the central bank the Monetary Policy Committee has increased the MPR, that's monetary policy rates, which has a lot of implication on lending rates, by the way. Right. It has implication on prime lending rate, it has implication on financial, but I don't want to bore people with the technicalities. So now, it used to be 18.75, now to 22.75. That means it has been increased by 400 basis points. That increase to you would wonder is just 18 to 22. But that's implication on what banks will charge as their lending rates to people that wants to borrow. I will come back to that explanation if I have time. The second one is cash reserve requirement or cash reserve ratio is the proportion of money that must go to central bank anytime you deposit money with your bank. I've just put in a layman language so that people understand. Reserve from the money that is with the bank that should go to the apex bank.
So if I give 100,000 naira to the bank, I deposit 100,000.
So 45,000 is what is expected to go.
To go where?
To the central bank.
Really?
So the bank will not use all your money.
Right.
So the bank have liquidity ratio, which is 30%. So 30% of the money stays with the bank votes. Then you have another 45,000 that goes to the central bank. I'm using it as a very simple, it's a bit more technical than that. Then bank has the rest to trade with. So the question is, we have, with these policies, bank has to give more and technically will increase rates. The implication is that if you want to borrow money from bank, as soon as this policy is implemented, which I think is immediate, the interest rate that you understand, which takes its strength from what happened today, would increase. What does it mean? It's going to crowd out employment. That is, businesses will not find it comfortable to invest, especially domestic people that wants to work in the real sector. Now, let me show you the difference between real sector and monetary, the monetary conversation we're having. The reason for this is we want to combat high inflation. Inflation is 29.9% according to National Bureau of Statistics. The central bank has mandate for price stability, or rather than exchange rate stability on the other hand. We can summarize by saying that the function of the central bank of a country is stability. Nigeria has not seen stability in FX, and we have also seen stability in price, which is because of high inflation. So here is it. How do we combat these two together? They said that if the foundation be destroyed, what shall the righteous do? You have to look at the foundation of inflation. The foundation of inflation is not monetary driven. It's not as a result of demand. It's as a result of costs. Cost of things are increasing because we are importing. And because we are importing, we also have challenges that has to do with exchange rates. So that's two. Thirdly, you also need to look at food inflation. That is over 35%. According to the same report that told us inflation is now 29.9%. Food inflation is inflation is increasing, especially food inflation. According to Bureau of Statistics, because of limited supply. That is, farmers are not able to get to farm because of insurgents. Solving that will not be as a result of increasing MPR. MPR will not solve challenges of food inflation. So increasing MPR by 400 basis points, it's supposed to fight inflation, provided the real cause of inflation is demand pull. But in the real sense, not my figures, according to the analysis by another government agencies, the report from National Bureau of Statistics revealed that what is driving this inflation is not demand pull, it is cost push. If it is cost push, then you need beyond that policy. You need us to go into supply, which is the long run we are running for. And we cannot, central bank cannot do this production. Unfortunately, it is the fiscal side that would support. Even though in economic literature, it is assumed that central bank has sole responsibility in combating inflation, and that is the limitation of classical economists.
So with all of this,
not classical economists,
right.
I beg your pardon, not classical economists, those that belongs to Keynesian school, we tell you there is need for government intervention. In some instances, not in all instances, there is need for a third hand to regulate the limitation of both demand and supply. And unfortunately, if we don't, we will be subject to economic theories that without simulating it, to see what the result will look like. This is not the first time we are increasing MPR. All the time we have increased MPR, what has happened to prices? Increase. I've really seen a major turnaround since 2015 till date. We never had single-digit inflation. What is accurate inflation we should have globally is between 2 to 5%. In Nigeria, the central bank target originally is 6 to 9%. But suddenly we said we want to settle with 21% inflation, which of course, check across the globe. What are people aiming for? There are countries now that have over 100% inflation, people that remove their subsidy and devalue their economy at the same time.
What are you saying? Are you saying the IMF recommendations to remove subsidy and all the rest of them, is that what you're addressing?
I will tell you this. Read World Bank reports.
Right.
A month after President Tinubu got to office, IMF reports reveals that after President Tinubu have floated the naira and remove subsidy. World Bank report indicated that 5.1 million people may get into poverty bracket because of the policy a sister agency IMF recommended. Now, so IMF on one hand is recommending a policy, but IMF knew that the income per capita of the country will drastically reduce. Do you know that our income per capita is almost half? Why? Because when you look at the value of Nigeria economy using dollar as a parameter, before now it was a bit below $500 billion. Because exchange rate changed from 600 or 700 as the case may be to over 1,000, you have to divide it. Then you now divide the total number you have by over 200 million people, 220 million people. Then you see that Nigeria and poorer. To be a developed nation or a growing nation, beyond developing, a standard, an economy that you want to envy. Per capita income must not be less than 20,000 per head. Nigeria is struggling to do 2,500.
So
how therefore can we make policy that will further put us in this kind of situation? Let me also say, because businesses by tomorrow, they will start getting the meaning of this.
Right.
The meaning is banks,
I was headed down.
Banks will start writing them that, hey, the policy rate has changed. When policy rate increases, and you can interview people, you are a reputable organization, interview the meaning of this to businesses. They will start writing them. Interest rates has changed. This is now the new rate. What does it mean to them? They have to look for more money. If they cannot, what suffers? Employment. So I am not saying MPR should not have increased. MPC should not have increased. But 400 basis points
is a lot.
Is a supersized increase.
Very
for lack of
quickly,
words.
still on the CBN's, trying to intervene somewhat. It's come up with plans to sell $20,000 to BDCs, to Bureau d'Change. That's more than 2 years after the central bank had stopped selling dollars to the BDCs. How much impact is this going to have, especially on the issue of dollar?
In the short run, we will see some improvements, which I am happy with.
The naira will gain?
Yeah, naira will gain in the short term. Short term means not more than 6 months or max 1 year. It will gain. But we have that window of short term to quickly go into manufacturing, to start signaling manufacturing, agro highlight progress in the economy. I've recommended National Agricultural Transformation Plan to be implemented fully such that we can produce some of the things we are not producing today. People will say we don't have to produce everything. I agree. But we also don't have to be economic slave to the remaining nation. People say we don't have economic cost advantage over some things. There is no country created by God that started with economic comparative cost advantage. Comparative cost advantage is induced, is planned. Zanzibar is in Tanzania. Never had economic cost advantage over tourism. When you compare it with the remaining of East Africa. But Tanzania knew we need to get money inflows into our country. They have to build the kind of security that is expected and build some resource center around Zanzibar. Today, most part when they are thinking of East Europe, rather than going to Kenya, people want to go to Tanzania. And best way is Zanzibar.
To the extent that people don't even know Zanzibar is right inside Tanzania. Very quickly before we go, for us to sustain what you highlighted, because if you say in the interim, it can work for us, giving these monies to the selling to the BDC, How can the government, within that space of 6 months, quickly get our economy working to the extent that when, after the 6-month period, we're not back to losing street?
So we need beyond the central bank. Throughout Governor Emefiele's administration as governor of the central bank, we have seen several communication, about several interviews on some of the policy. It got to a point Governor Emefiele was not even mentioning that he needs fiscal to respond. Again, fiscal authority must signal positively and must start responding from tomorrow that these are the policy we know there will be a reversal of some sort. And this reversal, I told you, in months, it could be 1 month, it could be 2 weeks, it could be 6 months, but it can never be beyond a year if we don't add to it. So I'm very hopeful, and that government will do the right thing within the short period we have because of this policy. It also depends on number of people that register as BDC, because what central bank is doing is boosting supply side, which have been a shortage for a long time. So if you boost supply side with $20,000 for 5 people, you know what that is. For 10 organizations, you know what that is, depending on the number of organizations that is at. But when you start seeing surge by 5 naira, 10 naira, 100 naira, 200 naira increase, is saying that what we are intervening, because central bank has left flotation technically, it's not back intervening in the market. And what brought us here at first time is saying we want to float the naira. Like I said, when you interview me on that, we can never sustain it. And it's obvious that today we have not been able to sustain it.
Thank you very much. It's a good place to leave it. So thank you so much for simplifying it for us.